Welcome, everybody. We're the Sonoma Brain Trust, bringing you facts over fear. I am joined by Chelsea Runnings, a real estate expert from Better Homes and Gardens, and Daren Blonsky, a financial expert with Sonoma Wealth Advisors. I'm Mary Piasta with Hauser, Veluzzo, and Piasta. Earlier today, we talked with a tax specialist, Nate Lamar, to discuss what's going on in the world of the PPP loans. There's some misinformation out there with respect to forgiveness, and it's really important for businesses to know right now that, maybe your PPP loan isn't going to be forgivable. So you get those facts by linking to our prior video with Nate Lamar, and you can see that on our channel. Also, in the world of law, we have some interesting developments. Sad for our community. We're seeing these terrible riots and abuses of power that will hopefully be corrected appropriately in our court system. And it's just so tragic. And in our own Sonoma here, we had a sheriff go rogue, as some are saying, and say that he wouldn't enforce the COVID orders, which had some different ramifications with some businesses, and I won't say which ones, but going beyond the orders and opening prematurely. We also have our tourist town that's been packed with tourists visiting, not wearing masks. Now, the sheriff saw the light and realigned his position to say that he will be enforcing the orders. So that is, in my view, a positive thing for our community.
Mary, did he actually, I heard mixed reports. He recanted, didn't, and then dropped the F-bomb. I don't know what he's doing, right?
I'm like whiplash from it.
Okay.
So it was like this big public thing where, he's in a press release or something saying he's not going to enforce. And then yesterday, one of our supervisors, Susan Gorin, issued a press statement where basically she's saying that they have come to an arrangement that he will enforce the order. So, I think this is just a sign of our times. There's ambiguity all over the place. We have complicated different edicts coming out from various elected and legal making bodies, and some of it's contradictory. So it's really complicated for businesses right now to figure out what they need to do. And that's why folks are dedicated to trying to give you guys the accurate information as it's coming out here. So, but yeah, it's definitely a strange time in the legal world.
Right. Sorry to interrupt, but the agreement that they came up with today, I think I read that he'll be enforcing the stay-at-home orders or the shelter-in-place orders, the health orders, until the 8th of June. Is that what the new agreement was, or the 6th of June? I had read that today.
I'm not sure the date on it, but the big message, I think, is that there will be enforcement. And I think part of it is in listening to, I was on a conference call with Senator Dodd, who was speaking to the Chamber of Commerce yesterday. And, a big thing is that people are wanting at different levels of government transparency. Public wants more information. Well, where are the infected people? How many people are actually hospitalized? Instead of this veil of secrecy, especially when you're dealing with the interference of people's rights, So it's, hopefully we're moving towards a more transparent governmental structure where they'll partner with the public, but we have yet to see that.
It seems that the word of, if I had to summarize the word in every aspect of our lives right now, it's just uncertainty, right?
Yeah.
It's just everything seems so uncertain, and when we're trying to figure out, what are the COVID cases? Well, the New York Times says this, and John Hopkins says this, and University of Washington says that. And so we're watching it really closely to say, well, shoot, now you got all these protests. We thought we were going to get a spike with the opening ups of the economy. Now it's really possible. And I saw a headline on Fox News this morning, which I think Fox News kind of leans the other way as far as less cases. And they were even posting this morning saying that Dallas County has a spike in cases. And Texas was one of the first now to open. There was a bunch of protests there yesterday. So that doesn't look good for the COVID going away. And I've noticed out in Solano County that the cases have been increasingly going up. I think as I looked yesterday, there's more cases now than there has been this whole time, right? I think there's just like this, people are just so done with it, right? And they're just so done with sheltering in place. They're done with the lack of normalcy. And I think that's part of, what we're seeing with these riots and what's going on with the protests. You look at this, the African-American community has been hit by unemployment by far more than any other community, right? And they've very disproportionately lost jobs. So I think that's what's kind of fomenting this just uncertainty, this fear that people are feeling about the future and where we're headed. So it's really just an interesting time to be alive for all of us, right? And to absorb this and try and educate our children and our loved ones and try to figure out, what's the right way to navigate times like this.
Yeah, I don't think there are any right answers. And I think Daren, by, saying that it's basically parental responsibility to teach our children how to be good people and appreciate all, like that's something we can do. Are anarchists coming into our communities going to help that? I mean, look at all these poor businesses that are trying to reopen and the cost to them of, these actions, not to mention the public health risk. I mean, I think there are some really additional serious factors that are, at issue right now. And we'll just have to wait and see what happens.
I actually live out in a community called Green Valley, and there's a protest tonight. And, I feel really mixed about it because in some levels, I feel like the message is really important, right? And I feel like we need to have these dialogues and these conversations about racism and how it's systemically embedded within our organization of life and those type of things. And there's that conversation, which is an important conversation to have, whether you feel it's true or not, right? The conversation needs to be had. And yet you've got these anarchists, you've got these people that are using these protests, and basically they jump in the middle of them, wait for things to go haywire, provoke the protest with the police so that the police have to start protecting themselves by either pepper spraying or whatever, rubber bullets. And then you've got these people that were legitimately protesting things they felt passionately about and they're constitutionally should have the ability to protest, that have now been caught up in this cycle on some levels of these just, people that feel like creating anarchy and hate is a better way to go. They're just using these protests to then go loot, right? Yep. And to break stuff. And so we've got a protest planned, 2 blocks away from where I live. And I'm just kind of like, how do you support the message but not support these people now that are using the message to further their agenda that I don't agree with, which is the anarchy, and that, that we need to create change by breaking things. And I don't support that. So it's an interesting time for us all and how we navigate our own personal feelings through it. And
I got a message from the Better Homes and Gardens real estate CEO, and I wanted to share it because I thought it was so good. She says, 2020 is a year we will always remember. Let's gather the very best within ourselves and inspire others to do the same, so that we don't remember 2020 as a year that tested us, but rather as a year where we surmounted incredible challenge to evolve and grow in ways we never could have imagined.
Yeah, that's good.
It was so impactful. And I think, right now everyone's emotions and the tension, it's so high. It's boiling over. And it's everything that's been going on since March has been just a recipe for disaster. And now we're just adding more ingredients into it. And we're just, I don't know. It's been such a heavy couple of months. And these last few days have been so overwhelming. Mm-hmm. I don't know. I think Daren's right. You want to support the message and get behind it, but then there are the people who use it and take advantage and just create havoc and chaos, and it's so hard.
Well, and it's like, are you proactive or reactive? And I think, what we're seeing in the real estate market could be part of a more generalized reactivity, right? Like people leaving the big cities and coming in the suburbs.
like I've been saying for the last few weeks, the studies have been coming out showing that more people are leaving the highly populated areas to get into the less densely populated areas. But I would not be surprised if we see people just trying to get further and further away from people in general, like just trying to have their space and not be in these situations where, you know, their house may potentially get broken into because there's a riot on that street or a massive protest on that street. We haven't seen the effects of what's happening in the protests and riots right now in real estate. We're still staying pretty steady. In the Valley, we still have 121 active listings. Let's see, we had 121 active listings right now for our pending sale, and 5 sold in the last week. And the inventory of those 121, 75 are $1 million and over, which, I mean, I don't know. I assume the people moving from, you know, San Francisco and San Jose and Silicon Valley, they can afford those kind of prices. I don't know what, like demographic wise, what we're going to see coming into the Valley. That's yet to play out. But I think we'll see just kind of the prices staying stable. You know, we do see small dips here and there, but with the inventory being relatively tight still, it'll, you know, those prices are going to stay stable, if not increase. I did want to point out, when we started these videos, what has it been, 4 weeks, 5 weeks now? We were just reaching 5 million homes in forbearance. We've now passed 6 million homes in forbearance. So we've gone over 1 million in just, you know, 4 weeks time, which is insane to me. But it,
Chelsea, any idea how that compares to 08?
No, I'm not really sure how it compares, because people weren't really doing forbearances then. They were just, you know, getting caught up in these horrible loans that they could not, there was just no way for them to get out of the loans or stay on top of the loans back then. Those were those loans where people shouldn't have gotten a loan at that price, or they were doing stated income where they just said, this is how much I make, and then they get a loan at that price, but, you know, they weren't actually making that amount. So there was nothing they could do at the time to actually save their homes. Versus now, the loans, giving out loans have tightened up, so it's not that the people can't make their payments, it's just that at this moment in time, they've chosen to get a forbearance on the payments until maybe employment studies or something like that. So I don't.
The good news might be, Chelsea, that a lot of the people who lost homes in 08, usually bought more than they actually could afford with their income. With it, that hasn't, you know, the lending requirements never really loosened through this last cycle. And so perhaps there's more people that have more equity in their homes, and they'll be able to navigate a way out of it. That's
a huge thing. Is back in 2008, people owed more than what their houses are worth. And that's not really a thing right now. I think most homeowners have at least 20% equity in their houses right now. So that's a huge thing that's going to make a difference between 2008 and 2009, or 2008, 2009 and today. So,
well, one headline, it's more on the commercial side I saw today, but California is exploring, I think it was just letting restaurants and entertainment places out of all their commercial leases. And which, I get it if you're a restaurant owner and you're in entertainment, but all these people who own these properties that have rented them out on the expectation and ability to get income from that, and then letting it being forced to let everyone out of their leases with no payment back or anything. I mean, boy, if that happens in California, I mean, the fallout of that is going to be substantial. So it'd be interesting to see if they actually go through with that.
It's such a slippery slope.
Sorry, go ahead.
I was gonna say, it's such a slippery slope. You know, people are trying to get like tenants not paying rent in restaurants and these big businesses, and then there's the residential tenants who are trying to get bills passed that they don't have to pay their rents for an extended period of time. But you're right, on the backside of that, it's the people who own these buildings who still have to make those mortgage payments. If they're not collecting the rents to make those mortgage payments, you're still going to lose your business space or lose your home. because these people still have to make those payments. It's like,
Yeah.
it's a slippery one.
Yeah.
Holy.
I was talking about this with a commercial real estate broker yesterday, and we have a shared client with commercial space. And, you know, her company's done a lot of intellectual research on these bills, and she's welcome to advise on it. But it is very problematic, especially when we talk about elders who have built and put their worth into buildings, and they need that money. You know, they're not working otherwise. And then when their tenants stop paying, it's really problematic. And as we launch more into the current state of what's going on right now with respect to this, there are a lot of misinformed tenants who have chosen not to pay rent, thinking that it's basically a forgiveness period while we have the eviction moratoriums, but when in fact the rent is still considered owing. So there's this disconnect in information that, you know, hopefully more people will get educated on.
Well, it's so similar to what we heard from Nate at the CPA. It's like these PPP loans, you know, they come out and say, oh, it's free money. And everyone's like, oh, it's free money. And there's this gold rush to get it. And then there's this realization like, well, there's a catch. And so, I mean, it's similar with this loan forbearance. And, you know, these politicians come out and they have these great one-liners of like, hey, you know, don't pay your mortgage, or, you know, we're sending all this money to you. But the reality is the money doesn't get where you think it's going. And you end up, if you do use one of these bailout programs, there's a ton of strings attached, and you're lucky if you navigate through it. Better to not just touch it, period, because unless you need it really and you have no other option, you're probably going to be dealing with a headache. Because
and the strange legal side of it is usually if you go get a loan, you have all your papers, you sign, it's all explained. Well, here you have things and you have regulations that are being affected after the fact. So what you applied thinking it was going to be forgivable, but now, oh wait, maybe it's not forgivable. So, you know, I think that offers a landmine for the folks who've accepted the money. And then you have the best practices issue that Nate spoke about too, and what happens if you commingle your money, you know, all sorts of things, which may tie into what happens if governments are now investing in our financial markets. Daren, what are you seeing happening right now?
Yeah, talk about bailouts. So our last video, we kind of played with the phrase, you know, don't fight the Fed, right? And there's this old saying in the investment world that you don't fight the Fed. The Fed, in the way they use monetary policy, you just can't. They can swamp the markets, right? And one of the things I've been watching very closely, we saw the Federal Reserve, which is the central banking system for the United States, came in March and started buying in a big way into the markets. And what they did is they backstopped the bond market and created all these lending facilities. So people who needed to use the Fed to get liquidity could. And then secondly, they started buying junk bonds, which is HYG, is a ETF ticker you can track. And that's all the junk bonds out there. And I'm going to share my screen for you. And so what happened when the Fed stepped in, you can see on your screen, this is HYG. And this is the chart for 1 day periods. So this was the market, and you can see it was just a falling knife, right? Because there's liquidity issues in the market, meaning that people who wanted to sell their bonds couldn't sell them. There was no buyers on the other side. So that created liquidity. Fed steps in, they can solve liquidity. They're thinking too, perhaps they can solve solvency. And that's the next headwind we've got to face as a country, whether it's on the personal wealth side, on business wealth side. We're going to be headed straight into a solvency crisis, perhaps. Federal Reserve this week came out and said, hey, we're going to, we're going to make sure that people can come get loans if they need it. But as we just heard from Nate, like, if you got to touch the lending desk of the Fed, or from either the monetary side from the Fed or from the fiscal policy side from Congress, like, you're getting strings attached to you. So businesses have to be resistant to that. And if you can see on this screen here, each one of these candlesticks represents a day in the market. So a red candlestick represents where the body, you can see it represents the open and the bottom represents the close. And then the wick is that period where the highest point to the lowest point. And you could see it was just falling like a knife, and the Fed steps in and starts protecting it. And then all of a sudden you get what we call a bid in the market, where it just gaps up. So you can see that huge gap, and then the market closed its gap down and then bid straight back up. Well, that's because the Fed's literally printing money. So think about that. They just digitally print it. They don't actually run the, print the dollars anymore. They digitally print it, and they go in and they're buying U.S. corporate debt. And that's why that market has gone up incredibly. Because if you think about it, and from a fundamentalist standpoint, high yield debt is junk bonds. These are the companies that are barely solvent, that don't have good businesses, that are not great, and our government's buying them to backstop them because that's important to prop up the market, right? So it's really interesting. But you're not only are you seeing that from the Fed, but you're seeing that from the Swiss National Bank. So there's been some research working out through the world, and when we look at the Swiss National Bank, so this is like the Federal Reserve for the Swiss, and you look at their top holdings: Microsoft, Apple, Amazon, Alphabet, and Facebook. Only thing they're missing is Netflix in there, right? But they actually own quite a bit of Netflix too, but just not as much. And so everyone's going, well, why is the market going up so much, right? Because the fundamentals aren't supporting it. So what you've got in front of you is a sector map. So the S&P is made up of 11 sectors, and this is year to date. And year to date, technology's up 6.84%, but financials, consumer staples, material, real estate, utilities, energy, and industrials are all deeply in the red. The only really growth in consumer discretionary is flat. Take Amazon out of there, it's definitely negative. So you've seen growth in communication services, technology, and healthcare. That's what's propping and holding up the market. So it's just really interesting when you look at that, and we've got basically a system that's more or less being held up by the central banks. And so that's why I go back to that saying that we always say, and that is, don't fight the Fed, because it's very clear the Fed is operating there. Don't fight the Swiss National Bank, because literally they can go out and just say, we're going to print some more francs today. Go exchange that for dollars and then buy some U.S. technology stocks from it. And you think about it, like, why would the government do that? That's crazy. It creates all these bubbles. Well, they don't have a choice, right? The asset bubbles that there might be creating right now that are detached completely from the fundamentals, they have to do that. Because if you think about it, most of America and its wealth is in 401k plans. So if you have a 401k and all of a sudden all of America's 401ks are just decimated, it's a heck of a lot cheaper to go out and buy stocks than it is to start paying for everybody's retirement. So what you're seeing is that uncertain world that we've talked about, and in that uncertainty we're seeing, it's this idea that the Fed's going to do what the Fed has to do, period. Right? So this idea, well, the Fed can't do this and the Fed can't do that and the Fed's charters this, get that out of your minds, right? Because that is going to change. We're in a new world. I was reading a book called The Fourth Turning. Have you guys heard of it? Yeah. You want to blow your mind, because this book wasn't written recently. Blow your mind and read The Fourth Turning. It will give you context for all the rioting we're seeing, context for what we're seeing in the markets. Really interesting. Last thing I'll just jump into for this week, Bitcoin. You've heard me talk on this show the last few weeks about Bitcoin. President Trump came out yesterday at 4 o'clock and says, we're going to dominate. That was the words he used, dominate the streets with the military if you governors don't get it under control. Bitcoin goes, whoa, okay. So people pile into Bitcoin like crazy yesterday. We had a huge bid up, hit this resistance point of the 10,000 mark, which is a really important point for Bitcoin to break. Once it breaks that, we should see a lot more volume in it. And then we sold off deep today, right? This is why I always say to investors and people I coach and people I work with financially, don't chase momentum. You don't chase momentum. Because if you chase that thinking game on, you got a pie in the face this morning. So you want to really watch that, but it's Bitcoin starting to show some really interesting action. There's this trust called Grayscale Bitcoin Trust that's out there where you can actually buy Bitcoin. I am not recommending, be clear to anyone that they buy it. They should consult an advisor prior, but you can buy Bitcoin in your IRAs, in your, and not actually have to go out. You pay a hefty fee of 20%, more or less you give up of the coin, but it's the only way you can get it in an IRA. And they're buying literally, there's so much info going into Grayscale Bitcoin Trust right now that every 10 minutes or so, there's a new Bitcoin getting put onto the market through the algorithms that the computers are writing. And then every 10 minutes, Grayscale is consuming all of that supply because there's so many people piling into this because people are concerned. The dollar is getting insane amount of flow into the system, meaning the Fed is just printing dollars left and right. So people are concerned on, will that be able to really maintain value over time? So a lot of interesting stuff. We had some really interesting moves in the market this week. Stock market was boring as snot. Paint was drying in the stock market, and it continues to stay up because we've got federal and central banks more or less going in and buying the markets up. So you can see we were in this for about a month, kind of in this channel. We got that break. We've had a good week in the market so far. It's looking good. We'll see how long it lasts. We're long in the tooth on this one, watching it daily, and we'll see where it goes. That's all I got.
New meaning to money doesn't grow on trees when you talk about the Fed just digitally printing money.
You just need a printer.
Right. I just add zeros to my bank account because that's what the Fed's doing. They're just adding zeros. Like, and that's what's really interesting psychologically for, I think, investors to get in their mind and people pushing back against digital currency. Mm-hmm. You've got to realize we're already digital currency. Like that dollar, that physical dollar, those days are done. And they're going to phase out. I think COVID virus is going to help push that even further. Because if you think it's absolutely dumb that we're still transacting in these cash dollars, and these things could literally be carrying disease around the world.
Right. Oh, that's interesting too.
Right. And so I drove by a shop the other day, or it was a Dutch Brothers. I don't think it wasn't one in Sonoma, but I drove by it and it said, we're no longer accepting physical cash.
Oh, yeah.
Done. Right. So the psychology has got to shift. If you want to preserve value for the future, you've got to start thinking like, okay, how am I protecting myself from a digital standpoint? Having literally dollars under your bed, not such a great idea.
Yeah, but maybe gold bricks.
Yeah, right. Gold bricks. I was listening to, there's this really interesting gentleman named Raoul Pal, and he runs this whole group called Real Vision, and they're really macro economists and talking about a lot of these real estate things. And one of the points they made yesterday, jumping back to your point, Chelsea, is that they said that, perhaps that we've seen the end and we've grown too big and created too many homes, too much commercial real estate for the demand to actually continue through in our generation, because our generation, us on this call right now, don't consume real estate the same way that our parents or the baby boomers perhaps have. And that we're actually moving and that's shifting, right? And as that shifts, then we'll have this huge excess demand of commercial real estate, of residential real estate, really fascinating kind of larger macroeconomic questions that I think we all need to ponder and ask. And one of the things they were talking about is, the disconnect between, to your point, Mary, gold and paper gold. So when you buy like GLD, which is an ETF or something like that, you're transacting in paper gold. But when you actually own the physical coin, the physical bar, that at some point there could be a complete disconnect between the two.
Wow.
Interesting big picture stuff. But if anyone wants to really like blow your mind out, check out on Raoul Powell podcasts on Real Visions. Whew, big stuff. A lot of changes out there.
Well, thank you everybody for joining us today on Sonoma Brain Trust. And we hope that you stay with us as we go through these times and bring you more facts over fear.
And make sure you subscribe to our channel so you can keep getting these weekly updates as we bring you guys the facts over fear.
And please share it, because the way we get the word out is sharing it. So share it, like it, subscribe to it. Thanks, everybody.
Sharing is caring in this instance.